Elsewhere, earnings season is always a big deal for Wall Street, of course. Companies and investors, many pros of a downbeat outlook for the profits right now. So what are the expectations for this first quarter season? Dominic Chu takes a look tonight.
When it comes to the strength of the upcoming earnings season, the bar has been set low, very low. A poll of Wall Street analysts conducted by Thomson Reuters is predicting a nearly 3% decline in quarterly earnings for S&P 500 companies. If that were to happen, it would be the first decline since the third quarter of 2009, as the nation was trying to emerge from the financial crisis.
We say that every quarter that guidance is important, but guidance could not be more important as we go into this earnings season because of the drawdown in estimates and the weak numbers that, by the way, the economic data releases that we got in the first quarter. The market needs to be sure and confirmation is needed that we are pulling out of it and things are going to get better in the next couple of quarters.
The consensus is that the most earnings growth will come from the financial sector, as banks continue to work on improving their overall health and capital positions. Those banks will be in focus a lot next week as some of the biggest names like JP Morgan Chase, Wells Fargo, Bank of America, and Goldman Sachs report their numbers. The biggest drag on corporate earnings growth is expected to come from the energy sector. Perhaps no surprise given the sharp drop in oil prices we've seen over the course of the last year. The question for many investors will be whether or not large companies like ExxonMobil, Chevron, ConocoPhillips, and others are worth looking at given their recent stock slide. Some experts, though, are looking beyond the energy stocks for the best opportunities.
The places you focus is where we're getting the best relative performance in the stock market. And interestingly, the place we're getting the best relative performance are also the sectors of the market which are likely to post solid positive earnings. Consumer discretionary, that's certainly at the top of the list. Healthcare, information technology. I not only think you're going to have pretty good earnings in those three sectors for the first quarter, but I think for all of 2015 and for that matter, 2016.
The stock market hasn't seen a larger scale pullback since 2011, and earnings growth has been behind a lot of the optimism in the overall market. Now it's about whether America's biggest companies can keep that positive momentum going. For Nightly Business Report, I'm Dominic Chu.